Welcome on board Hemang Jani and discuss what he's making of the markets right now. Hemang, hi, morning. A lot of global developments and now with geopolitics as well included in that. And then, of course, back home, the SEBI F&O curbs as well. How do you think all of this is going to play out for our markets? Because a large part of the correction, I guess, already played out on Tuesday. And Monday, of course. Today, it seems like it's going to be a sedate 1% kind of downtick.
Good morning, Aisha. Yeah, while we were enjoying the holiday, a lot of developments were happening globally, and even Tuesday evening we had this, circular of SEBI to curb the F&O trade. So I think it's going to be eventful. My understanding is that as far as the broader markets are concerned, we had already started, seeing the trend that they might cool off a bit. And again, we are entering into earnings season, and the quarterly updates would start flowing in. So I think the broader call one will have to take only post getting the clarity on the earnings picture. But my overall view is that the Nifty or the large cap companies, by and large, should hold out. I don't see a reason for a significant downward correction as far as the Nifty and the large caps are concerned. Broader market, it might cool off, and it's good. I think it's healthy that, after seeing a very significant up move in the last 1 year, if they go through a bit of a pause, we should not complain about it. And you will find some good opportunities wherever you see meaningful correction in the broader market as well. So I think just, we should have a bit of a wait and watch kind of an approach and look out for buying opportunities whenever there are sharp corrections.
Okay, fair enough. It is going to be a busy month, lots of data points that are anticipated. But in the meantime, Hemang, what about the kind of the views that are coming in on the entire FMCG space? We had some operational updates as well kick in. Dabur saying that mid to single digit revenue growth is expected. You have Marico as well concurring with that domestic business will see mid single digit growth. And Investec as well saying that it's been the weakest quarter in the last 4 years.
Yeah, so I think after seeing a bit of a revival in the FMCG bag and people talking about green shoots, I think the updates which have come through from Dabur are not encouraging. Marico also is okay-ish, but it is not that bad. But I think we should watch out for the broader, sector performance. Maybe Dabur can have company-related issues, and the stock price also suggested earlier that there can be some sort of a disappointment on the business update. So overall, this is a defensive sector, and for some of the companies like HUL, Godrej Consumer, the fact that the palm oil prices have corrected sharply would also help them in some way. So I would be, equal weight on the sector. HUL would be something that would be comfortable with. Marico is something that we've been liking for a while. Godrej Consumer again, because of the fact that the palm oil prices have corrected. So take a selective bet, but in a volatile times, FMCG typically provides you some sort of a stability. So I think we should have some exposure there.
Do you believe that there is a meaningful move and investment opportunity in metals?
Aisha, from a technical or trading perspective, surely this space makes sense given the recovery that we have seen in the Chinese markets, the possibility of a very strong stimulus, and the fact that the pricing environment is getting better both for ferrous and non-ferrous metals. So I think something like a JSW Steel, Jindal Steel, also Hindalco, Nalco, Moil. I think these are some of the names that should do well in the current scenario. But we have to bear in mind that a part of the run up has already happened. So, one is not really looking at a very, significant up move from current levels, but it does provide some more room to, participate in that trade.
Where do you stand when it comes to the entire metal space? Brokerage is clearly giving a thumbs up, saying that now the steel producers in particular are in quite a sweet spot. Do you agree?
Yeah, I do think that, steel companies do provide a good trading opportunity. And given the fact that, something like a JSW Steel, Tata Steel, have not really participated in this entire run-up that we've seen, and with China showing so much of strength both in the stock market as well as possibility of a stimulus. So I think that bodes well for the steel companies. So JSW Steel, Jindal Steel, Tata Steel are the names that we like at this point.
Well, suddenly metals are occupying a lot of limelight. A lot of limelight. Hemang, what's your view on Ola? Went public at 75, went to 150, 150 has become 100. So it is 50% higher than its issue price and 50% lower from its all-time high.
So, typically a newly listed company, and that too in a EV kind of a space. So typically they go to the market with very high valuation, very high expectations. And sometimes when there is a frenzy in the market around listing time, you do see these kind of moves. But my overall belief has been that the growth story, while it may look very good on an Excel sheet, the actual growth valuations, I am not very comfortable buying these kind of companies unless you find them at a decent valuations. So I have always been saying that go with the incumbent players like Bajaj, TVS, those are better plays because they also have a reasonably good presence in the EV market. Plus, their current business is showing a decent growth. So why pay such exorbitant valuations to a new player just because he's only doing EV?
Well, it's been a good run for pharma. Is it time now to move out of pharma to diagnostics and healthcare?
I think, Nikunj, when you look at the pharma space, the diagnostics and the healthcare is a very small component of the overall market cap. So you can have some allocation, some exposure to the healthcare names, but pharma is a relatively bigger space. So, and given that, we are seeing very good positive commentary from the, likes of Lupin, Sun Pharma, Aurobindo, of course, it has a little bit of issues in terms of the observations, but the business per se is looking up. So I do think that in this kind of times when the sector performs, and this last quarter, pharma was one of the best performing sector in terms of earnings growth, about 24% growth. So I do think that one should continue with Sun Pharma, Cipla, even Aurobindo, if it corrects a bit, will provide a good entry point and have some exposure to the diagnostic companies like Dr. Lal Pathway, which is expanding into the southern part. The pricing stability is coming back. So I think some combination of that would be good in the overall scheme of things.
Hemang, newsbits are indicating that the top 5 firms in the engineering space, L&T, HAL, BHEL, KEC and Kalpataru, have accumulatively acquired fresh orders in the first half worth about 2.04 lakh crores. How are you looking at the order momentum picking up and what this spells out? Is it going to be a very sort of divided view when it comes to the top 5 players, or is it going to be a blanket call that order momentum will pick up across the board when it comes to capital goods or engineering?
Overall momentum is still very good across the space, but if I have to make a fresh entry, I would be more comfortable getting into an L&T or a Siemens ABB where the order flow momentum is very strong. And I would definitely avoid some of the mid-cap, companies in the infra space, which have also done very well. So, it makes more sense to be a bit, selective in the space, given that the run-up has been sharp and the valuations are stretched.
Siemens, 86% higher this year. Thermax, again, cracker of a listing in terms of the kind of returns what they've given. I'm looking at Titan. Why am I looking at Titan? Because it's that time of the year when you start talking about festival season again. Frankly, it's been a flat year for Titan. And this entire lab-grown diamond or artificial diamond or CDC diamond, whatever that technical terminology is now really going to have an impact on the diamond prices. Hemang, I was reading an article which says that diamond prices are down 25 to 30%, and artificial diamonds or lab-grown diamond as they're popularly known, they are the most they are disruptive for the entire jewelry industry per se. In the light of what is happening to the diamond industry because of disruption, where does a Titan or a a Kalyan, or for that matter PC Jewelers, where do they fit in?
I think, Nikun, the way we look at this whole space is that diamond would, contribute to certain part of the revenue and profitability. And at the end of the day, when you're running a, jewelry chain, you keep all, options for the people. And so if there is any confusion with respect to lab grown diamond or the diamond business per se is going down, you could always have a strategy that will make up for that shortfall with some, other jewelry items. So when you look at the numbers per se, of course, Titan being a larger player, the overall growth is not looking that great. But given the positioning, the fact that the segment is growing, even when the gold prices are at an all-time high with a very significant high margin, I would surely have a positive view on Titan with some more exposure to the mid-cap companies, something like a Sanko or Kalyan, which are also doing well. But definitely, this is a space that should do well, because of the festive season, because of the wedding season, which is going to kickstart somewhere, in the next couple of months. So I think combining these two, this space should do well.
It's been cracking.
Thanks for joining in. Let's find out what Naresh's mid-cap trade.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.